In today's video, we are going to dive deeper into how to trade a reversal candle, specifically candle 2, within the ICT fractal model. I'll walk you through the logic behind the setup, what makes candle 2, and how to properly identify it within the fractal framework. Let's get into it. Now, the first thing you have to understand is the difference between an expansion candle and a reversal candle. An expansion candle is very straightforward. It will usually have a relatively small wick on both sides and a large body. That tells you that during that specific time period, price moved strongly in one direction with very little rejection. In other words, it trended. There was not much back and forth, just displacement in one direction. On the other hand, a reversal candle behaves differently. A reversal candle will open, make a strong move in the opposite direction first to form a large wick, and then come back toward its opening price before it closes. That large wick shows rejection. It shows that price pushed aggressively one way but could not sustain that move. So when you see a candle with small wicks and a strong body, that supports continuation and expansion. Price is showing commitment in that direction. But when you see a candle with a large wick, especially against the direction you want to trade, that does not support expansion. Price already used a large portion of its range forming that wick. We are not expecting price to run all the way down to form a deep lower wick and then suddenly expand massively higher in the same candle. There is only so much range available within that time period. So remember this simple idea. Small wick supports expansion, large wick does not support expansion. So how do we actually apply this? Let's say we are trying to frame a reversal off the previous candle's high. If I am expecting price to expand lower from that high, then I want the candle to support that idea. That means I want to see a small wick on the side that would interfere with my expansion. If price opens and immediately makes a large opposing run first, forming a big wick, that does not support continuation in the opposite direction. Why? Because price has already used a large portion of its available range creating that wick. For example, if I want price to expand lower, but it opens and first runs strongly upward, forming a large upper wick, then comes back down. That is not ideal for expansion lower. I am not expecting price to open, make a strong opposing move, and then still have enough time and range to trend aggressively downward in the same period. That would require too much movement within a limited window. So in that situation, instead of expecting a full expansion lower, I'm only expecting price to rotate back toward its opening price or maybe retest the current low. I'm not expecting a strong trend candle. The key idea is this. If I want expansion, I need structure that supports expansion. Small opposing wicks allow room for continuation. Large opposing wicks limit the probability of a strong move in the other direction. You can see in this first situation we have a large wick form and then the candle closes. After that, the next candle becomes a continuation candle. This is what we would call a reversal that leads into continuation. But notice how the structure forms. That large wick already consumed a significant portion of the available range inside that time period. So even if price continues, we have to understand that part of the range has already been used. Now compare that to the scenario where we have a small wick. When price sweeps the previous candle's high and only leaves behind a small opposing wick, that is very important. That tells us there was not a strong rejection in the opposite direction. There was no large counter move. Because of that, price has not used much of its available range. This small wick supports expansion lower because the candle still has room to move. It has not exhausted itself, forming a deep wick first. This is the key difference between the two reversal types. Both are technically reversals, but one supports expansion and one limits expansion. When we get a reversal with a small wick, that is the ideal setup. That structure allows price to trend. It allows us to target previous candle lows, session lows, or even use standard deviation projections. There is room for displacement. When we get a reversal with a large wick, we have to adjust expectations. We cannot expect price to open, run strongly one way to form a large wick, and then still trend aggressively in the opposite direction within the same candle. That takes too much time and too much range. So instead of aiming for large targets, we scale expectations back. In that case, I am usually targeting a return toward the opening price, or the current candle's low, rather than expecting a full expansion move. So the lesson is not that large wick reversals cannot be traded. The lesson is that they require different targets. Small wick reversals support expansion. Large wick reversals require conservative expectations. So now let's focus on the most ideal situation, which is trading a reversal that leads into expansion. The first thing we are going to do is mark out the previous candle's high on the higher time frame. That level becomes our point of interest. We are not randomly entering trades. We are framing the setup around a specific liquidity level. Once that high is marked, we wait for price to sweep it. That sweep is important because it takes the resting buy-side liquidity above the previous candle. After the sweep happens, we are not entering immediately. We are waiting for a change in the state of delivery on the lower time frame. When that change in delivery occurs, it forms what we call a protected high. That tells us the wick has likely formed and the manipulation phase is complete. Now we can anticipate that price has room to expand lower, especially if the wick that formed was small and did not consume too much range. At that point, we can look to trade the reversal itself, or position for the continuation that follows the reversal candle. The key is that the structure supports expansion. We are not forcing a move. We are aligning with liquidity, delivery shift, and a candle structure that leaves room for displacement. Now let's hop into TradingView and go over different scenarios, different types of reversal candles, and the opportunities they present so you can see how this plays out in real market conditions. Here we have a 4-hour bullish candle, and that candle is sitting inside a 4-hour bearish fair value gap. Because we are inside a higher time frame bearish PD array, I am naturally looking for short setups. I am not interested in buying into that imbalance. I am looking for a reversal that can lead into expansion lower. The first thing I do is mark out the high of that bullish 4-hour candle. That high is my liquidity reference. If price is going to reverse, it will likely sweep that high first. After marking the high, I shift down to a lower time frame. It does not matter which one you prefer, but personally, I like using the 1 minute for precision entries. On the 1 minute time frame, my goal is simple. I am looking for a confirmation model. It could be a market structure shift, a change in state of delivery, a fair value gap, or any model you are comfortable with. In this case, as price moves forward, we get a clear market structure shift, along with a fair value gap forming. Now before entering, I go back to the 4-hour candle and analyze the wick structure. This is important. I want to see whether the wick supports expansion. Looking at the candle, you can see the upper wick is relatively small. That is exactly what I want. A small upper wick means price has not consumed much of its range to the upside. That supports the idea that price can expand lower toward the previous candle's low. Since the higher time frame structure supports expansion, I go back to the 1 minute and place my entry at the fair value gap after the shift. My stop loss goes above the high that created the sweep, and my target is the previous 4-hour candle low. And as you can see, price delivers cleanly into that target. That is how you trade the 2-candle pattern in a reversal to expansion scenario. You frame it from the higher time frame, confirm on the lower time frame, and make sure the wick structure supports expansion. Now let me show you one more example so you can see the difference. Now let's look at one more example so you can clearly understand how to apply this. Here we have a 4-hour candle that is not sitting inside any higher time frame PD array. There's no fair value gap around it, nothing special in terms of location. It's just a clean 4-hour candle on its own. The first thing we do is mark out the high of that candle. That becomes our reference point. If price is going to reverse and expand lower, it will likely sweep that high first. After marking the high, we drop down to the lower time frame. In this case, we go to the 1 minute chart. As price develops, you can see that the high gets swept. That is the liquidity event we were waiting for. Now, after the sweep, we are not entering immediately. What we need next is a change in state of delivery. Moving forward, we get that change in state of delivery on the 1 minute. That shift tells us that buying pressure is done and sellers are stepping in. This confirms that the high we marked is now a secured high. In other words, the wick has likely formed and price has room to expand lower. At that point, I can enter on the change in state of delivery, place my stop loss above the high that was swept, and target the low of the 4-hour candle. As price continues, you can see how cleanly it expands straight into the lows without much drawdown. That's exactly how you use this concept. Mark the higher time frame high, wait for the sweep, wait for the shift in delivery, make sure the wick structure supports expansion, and then target the opposing side. All right, so that's the concept. You mark the higher time frame high, wait for the sweep, wait for the change in state of delivery, make sure the wick structure supports expansion, and then target the opposing side of the candle. That's it. No guessing, no forcing trades, just waiting for price to do the work. Remember, the key is not just the sweep. The key is the sweep plus the shift, plus a candle structure that supports expansion. When all three align, that's when you execute. If you found value in this, make sure you like the video, subscribe to the channel, and share it with someone who needs to understand reversal to expansion setups. If you want to connect with me, join my Telegram and Discord. Links are in the description. And if you want to learn personally from me, check out the mentorship link below. I'll see you in the next one.